we're open for questions now. In order to save some time to get more questions in, I'll take two at a time. Is there anyone here who would like to begin? Roberto.
Could you comment on whether you think some of the Latin American most successful, potentially successful emerging markets, Colombia, Peru, Chile, Mexico, Brazil, others, do they have to take seriously this challenge that has been talked about by some economists about new mechanisms and new strategies of avoiding sudden shocks in exchange rate appreciation?
Okay. Another question? Barbara?
Yes, thank you for a very interesting presentation. In order to get this additional growth, do all countries have to reform, or do those who reform, would they be able to net the growth without their partners doing so?
And I just want to add to that, when you talked about eliminating the restrictions to internal savings, what might those restrictions, just give us an example of what you're talking about exactly. Okay?
Yeah. Okay. Well, thank you. Thank you very much for the question. I found they are fascinating. Okay, let me go with Roberto, the first question of Roberto about the other countries, and let me put my answer in relation with what was talking about reforms. Colombia, I have been working very much on fiscal reform in Latin America, and maybe you will be surprised if I tell you that in the last 10 years in Latin America we have had 368 fiscal reforms. 368, which is really a huge number. 70% of these reforms were devoted to increase revenues, not to improve the quality or the rationality of the structure of revenues, and that is 78%. We are going to present a book next week, which is called what is the name? The name is Recaudar no es suficiente.
Collecting taxes isn't enough.
Yeah, we are going to do that in the next. Well, let me put the question of what has happened in Colombia last December. Last December in Colombia, what they discovered is that they wanted to do something, that they wanted to reduce tax on formal labor and creating a huge fiscal reform, which were not directed to increase revenue, just to reduce the distortion of the structure of all these extra taxes on labor, contribution to the social security for formal employers, formal employees. And what they have done, it's a reform in which, for the first time in many years, they don't look for to increase revenues, but they reduce the tax on formal labor just in order to reduce informality, and just in order to, with this reduction in informality, to create the increase in productivity which pays for the increase in revenues in 5 years' time. I think these sequences, or this decision, this political decision, shows the commitment of a lot of countries in Latin America. Colombia is the first, but Peru is going to do something very similar. And I think that this is an important, very important thing. I think I see commitment in governments, and I see how they are understanding what they have to do. Roberto, you raised the other question. When we're talking this morning that maybe we are now very optimistic, but we have assessment of the quality of our economic policy, which are quite bipolar. We have optimism or maniacal depressive when we look at the quality of the policies. And I agree with you, and I think that one of the reasons to be worried is the effect of this nominal appreciation of the exchange rate and how they are changing they're changing the perception of what it means to be orthodox in the region. I have been working the region for many years, and in the last 3 years, I cannot remember a meeting with a Minister of Finance or a governor of the central bank in which this Dutch disease story has not appeared. And increasingly, gradually, this has moved from the idea that, well, this is a problem, to the idea that this is a problem which has been caused by the developed world. Quantitative easing in the States, quantitative easing in Europe, quantitative easing in Japan, it's generating these capital inflows. These capital inflows are appreciating my nominal exchange rate and deindustrialization. I have to do something. I have to do something. Well, the economic theory and our analysis do not provide a 100% backing of this idea that it's just quantitative easing what is producing the real appreciation. In fact, if we go back and see our history, maybe we will be an honor, a good friend if we told them that maybe the combination of their monetary and fiscal policy is wrong, and if they move from the present very loose fiscal policy and very loose monetary policy to a tighter fiscal policy and an even looser monetary policy, the problems of nominal appreciation of the exchange rate will be lower and inflation will not be a risk, as it seems to me that it's going to be in other countries. But what I am seeing on a political economy terms is that the Minister of Finance of the region are really worried because they know that they are going to do something. And what they are going to do is to begin to grant subsidies. They are going to begin to run deficits to compensate the loser and the lobbies which are being affected by the real exchange appreciation. And they are going to use very macroprudential measures that could be okay, but which are less transparent than that what we have been used to have in the last 10 years. And protectionism is there. I think it's a risk that we cannot say that is not going to affect our path. I think that it's a real problem. I think that we have to think very closely on that. The question from Barbara about the spillovers. Well, what we see is that the spillover for a median country which do not make the reforms is less than 0.25 percentage point. Spillovers are not the main, or are not the main compensating effect. You have to do your homework. If you do your homework, you get the spillover. If you don't do your homework and the others do the homework, maybe you are going to increase your GDP by 0.25%. This is the exact number for the median Latin American country, but this is nothing when you are losing maybe 1 full percentage point due to the headwinds coming from abroad. And Susan, you were talking about what I was thinking about domestic saving. I think we have three main domestic measures.
These are the restrictions?
The restriction
to domestic savings, to increasing them.
Yeah, to increase. First of all, I think that all the measures that could reinforce property rights and the stability of the financial system and convince customers that what happened in the past is not going to happen again, I think it's the good way. Remember that from 1980 to the year 2011, Latin America has had 87 banking crises. There are at least 3 countries which has had four financial crisis, banking crises in 30 years. And of course, this is one of the reasons which explains why domestic saving is so low. Maybe because saving is not domestic.
Right.
This is self-defense.
Yeah.
I think it's not. This is the first one. The second one, I think inflation and inflation expectation are really critical to see how where people decide to invest or to save. Inflation expectation plus nominal exchange rate movements are critical in Latin America. There are going to continue to be a lot of citizens with things in terms of dollars when they think about their investment. They are not thinking in domestic currency, although this has been going down, and for instance in Brazil this is not the case. And the third point, we have more specific things, such for instance pension funds. Pension funds, which are long-term investors and which clearly when we think about infrastructure, I think it's the perfect fit between long-term investor and projects which are long-term in nature and which needs a long period of time to be financed and to be profitable. They invest less than 1.5% of their total assets in infrastructure projects. And I think maybe some of them are, in some countries, this is due to just the infrastructure effort. It's very recent and they have not reacted. Others have some rules which means that they are forced to invest abroad. And we have, again, the question of property rights in the bids for the long-term investment projects which has been allocated through very transparent bids are finally stopped for 3 years, 4 years, 5 years, are changed, and this, of course, is not the best way to attract investment for people who are looking profitability for their savings. Therefore, something about how we protect long-term investors, and at the same time we are able to bring them to take some risk or to share the risk with other participants to finance these projects. I think it's going to be extremely important.
Thank you. We are unfortunately over our time, so we won't be able to take any more specific questions. We want to thank you very, very much for an extremely interesting, informative, and maybe somewhat concerning kind of outlook, and we thank you for contributing to our understanding of what we might expect going forward and what the countries would have to do to try and avoid it. I really found it very interesting. Thank you.
You have some charts in your tables, and at the end of the chart you have the link where you can download the full report of our presentation.
Oh, terrific. Thank you. We now have a 10-minute coffee break, and then we will continue with our next featured speaker, Juan Carlos Pinzon, the Minister of Defense of Colombia, and then by the panel on trade and politics. So enjoy your coffee break, and please join me in thanking Mr. Ruiz.